Hello guys, welcome back. So let's get straight into the price action. Before we do that, let's give a quick shout out to our recent followers. So shout out to Mahboob Maghami. Shout out to you. Welcome to the family. Shout out to Khan Janzad. Shout out to you as well. Welcome to the family. I continually butcher these names, so apologies if I've actually butchered your name. Also, we've had a few comments lately. So we've had a bit more engagement. We've got Vinyl Jane. Big shout out to you. I'm glad you're finding the content useful. And shout out to everyone who's obviously watching these posts religiously and is actually learning from the content here. And if you obviously want any more assistance, feel free to hit me up. You can find me on tradejournal.co.uk, or you can also find me on Discord, so I can send that to you if needed. But let's get straight into the price action. We've got a lot to talk about. So what I figured I'd do today is spend some time going through some of the setups we've had recently, and not just that, actually spend some time teaching the principles behind a lot of what we're seeing in the charts, especially for Bitcoin. Now, bearing in mind, all of what I preach and all of what I speak about, you can apply in any single market. It doesn't just have to be crypto. You can apply it with altcoins. You can apply it with, forex, commodities, bonds, whatever you're trading. You can apply the same concepts. It's the same structure. It's the same, driving force of supply and demand, and it's the same fingerprint that the market leaves, whichever the market you're working with. So don't think because I trade Bitcoin, you have to trade Bitcoin. You can use whatever asset you want. So let's see. Well, prior to the last post, I think it was around Monday the 28th. So we were around here, this region here, this green line, this vertical green line. And we hadn't yet broken this trend line that we can see here. So we can see this nice, beautiful trend line that's been respected once. It's been respected twice, three times, four times, and we've kind of broken through it now. But we were around here. Okay, so let's take a look at what we were looking at as of that exact time. So we said we were in that range. Okay, here we can see this range in blue. I know we've got some distracting lines here, just ignore everything. But here we've got the range in blue. We had supply above us. I believe at the time it was 12-hour supply. We're going to check that in a second. Um, but it goes without saying, we had this range and we said, well, based on this range, we're going to try and play this like a range. We're going to look for range deviations. We're going to look for a reaction internally at demand and a reaction at supply. We realized that we were quite deep into our 4-hour block. But we said, well, if none of those ideas work, well, we have the other two. We said if none of those ideas work, there is a chance that we break out from this range. So we can obviously break bullishly or we can break bearishly. Now, what has actually happened is the former. We've broken bullishly out of this range. We've broken out of this range. We've retested the range extreme and we've carried on up. So if I play that, we can see exactly what happened there. So here, looking at this for the first time, it may not make sense what's actually transpired, but we've closed above this range, we've retested. However, we didn't get, I'll be honest, we didn't really get a deep retest. We got a very quick retest, and this is the 45 minutes, by the way. So we got a very quick retest, and then off we went. All right. Now, could you have entered along there? Let's take a look. Now, I'm sure 98% of traders, all right, would have said, you know what, this is a little bit too risky for me to enter along, let me leave it. But if you actually understand how ranges work, there's no reason why you can't enter trade. So quickly, I'm going to give you a quick synopsis of what usually happens. So first of all, you usually have your range, right? So let's say this is our range. Let's use our range template. We use range one. Okay, this is our range. You've got a range high, we've got a range low. Okay, and usually what price likes to do is price likes to play within our range. It might reach that range high, come back, head towards for the range low. Okay, break structure, again head towards the range high. But when price is ready to break out of this range, okay, so when it's ready to shoot up like this, okay, assuming price has left the range, okay, price usually likes to, especially Bitcoin, and you can backtest this and run the stats. It will do one of about three things. Okay, so number one, it will retest back all the way just to the range extreme. Okay, so just to range extreme, and then it will flip market structure and carry on up. That is scenario number one. Let's make that orange. Okay. Scenario number two, what price would do is it will say, do you know what? I'm going to come a little bit further down. Okay. So it's going to actually come back into your range. Okay. And it may be coming further down. Perhaps it's coming further down for like a demand zone in here. Maybe there's a demand zone trapped in here, or perhaps there's even a deeper demand zone maybe trapped in here. Okay. Price may come back for one of these and say, then I'm going to break structure and carry on further up. Okay, so that's scenario number one. Scenario number two. Now, obviously, this could happen here or it could happen down here. All right. But bearing in mind, the deeper and deeper and deeper you go, the less likely you are to continue further up. Why? Because what's the point of breaking all the way up just to come all the way back down in this range? You may as well just, take out these lows. All right. Now, what's scenario number three then? Well, scenario number three, let's see if you can figure out what scenario number three is. Well, scenario number three is in the case that we do not actually get a retracement. So we're going to make this blue. Scenario number three is in the case that the price breaks out from the range, it tries to retrace back, okay, but it just breaks structure shortly after. Okay, and what that does is that doesn't really mitigate this old range. It doesn't come back to mitigate this old range, creating what's known as a fair value gap. You see this gap here? This is a gap created, and this gap usually acts as a magnet for price to come back to. And this is how your supply and demand zones are born. Okay, so we call this a fair value gap. I can't spell today. Fair value gap. Okay, so that's exactly how they're born. Okay, so whenever you have a range, I blab on about ranges all the time. Well, if we get a range break, wait for scenario number one, scenario two, and scenario number three. Now, the reason why you shouldn't really be looking to enter a long here is because if you enter a long here, you're already late to the show. Why? Because people who long here are happy. People who long here are happy. People who long here, they're happy but a little bit skeptic, right? But regardless, they're all in profit. But if you long here, now, why would you long here when you know what's due? In terms of your order flow, your expectation order flow is some sort of retracement back before you carry on. So people who have longed here, they are likely to get stopped out. Now, they don't always get stopped out, but they are definitely likely to get stopped out. What you want to be this guy, this patient trader. This is the most informed and most patient trader. The guy that waits all the way for that retracement, waits for the flipping market structure, enters on that retracement leg and rides it all the way up. Okay, at least riding it first to that high. All right, so that's how we play these ranges. So now you know that. Okay, obviously more information like this is on the course, and this is a course I'm putting together at the moment. It might take me a while, but we'll get there in the end. And if you are interested in getting the course, definitely let me know. I'll put you on a waiting list. So what we're seeing here is, let's see what happened. Did we get scenario number one, scenario number two, or scenario number three? Well, where is our range, first of all? Well, why don't we drop to the hourly? So on the hourly, as we were looking earlier, we can see that this is our range. This is our box. Okay. Now, as far as our box goes, let's follow the market structure. I'm going to look at this on a 4-hour. So on a 4-hour, what does our market structure look like? Well, on a 4-hour, our market structure looks like this. Obviously, this is our range. We come, we create, we tap the range high, we rotate back, we get to the range low, we break structure again, we retrace, and then we have one smooth, aggressive shot up. Okay, and this is so aggressive. Why is it so aggressive? Well, look at the nature of these bars here. A lot of these bars, we have very full bars. All right, we have a nice full bar with big, large bodies. All right, nice bull bars, and look, we have 1, 2, 3, 4, 5, 6, 7 consecutive bull bars on a 4-hour in a row. All right, that is what we call bullish. That is aggressive. Buyers are stepping into the market. That's what they're doing. Institutions, high volume players, they are buying the asset. Do we see a retracement on a 4-hour? No, we do not see a retracement on a 4-hour. Okay, let's drop down to a 2-hour. And a 2-hour is quite similar, a flush up. So nothing there. What about the 30 minutes? Okay, so now on the 30 minutes, especially on this last leg, this last expansion leg, we're starting to see more structure. And what does that structure look like? Bearing in mind, this is your range high. Our structure now on the 30 minutes will look something like this. So just to draw this out quickly, I'll skip some structure points. High, 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 low, high, high. This is where we break structure on the 30. Now on the 30 minute, we do get a tiny retracement. Can you see that? A tiny retracement before we go boom, boom, boom. Okay. So what I'm going to do now is I'm going to simply investigate this retracement. So we're just going to do a box here. This was that retracement we talked about. All right, we're going to do a box here. Let's make that box, make it different color, make it yellow, and give it a bit of, let's make it yellow. Okay, cool. So we're going to look at that now and see, could we have entered a trade there? All right, now, not many people would have caught this one. And I don't blame you if you didn't. Don't knock yourself if you didn't. But this is quite advanced to be able to catch a tiny minuscule retracement like that. Okay, so to catch that, I'm going to have to drop on a 15-minute. Okay, and I'm going to have to analyze. And we may not get a trade here, actually. I haven't checked this. So we may not get a trade here. But let's simply see if on a lower time frame, we get a confirmation after this retracement. Okay, so as we zoom in, let's see there's nothing on the 5-minute. Why is there nothing on the 5-minute? Because at the moment, a 5-minute structure looks like this. Lower low, lower high, lower low, lower high, lower low. Okay, so actually on the 5, starting to look interesting though. I'll draw that out again. Actually, I'm going to drop to the 3-minute. I'll drop to the 3-minute and put this in a different color so we can all appreciate what's going on here. Make it red. So on the 3-minute, we've got a low low, lower high, low low, lower high, low low, lower high, low low. What does that mean? That means on the 3-minute, yeah, obviously we also realize that we have been reaccepted back into our range. Where is that range point? Where is that reference point? Where is that trend line, extreme point? That trend line extreme point is right here. It's this gray line over here. You see this gray line here? That was the extreme of your old range. You see price came back into it. That is the mitigation of your old range. Now, it's not a deep mitigation. It's a shallow mitigation. It's still a mitigation though. So what that means is that if we flip market structure now, this is on a 3-minute, and we can reconfirm, why not enter along? The place we need to close above is right here. So we're going to wait to see what does price do, at least on the 3-minute. We get that close and off we go. All right. So not only did we get that close here, well, that break-in structure was right there. That was the break. We also got a nice retracement back into demand. All right. Very beautiful retracement. And then we headed up. Okay. So if you enter that trade, congrats. I doubt a lot of people did. But if you enter that trade, congrats. And that would have been, let's say we entered around here. Your stop loss, where would your stop loss be? Question. Where would your stop loss be? Would you say, I'm going to put my stop loss all the way over here? No, we can't do that. We can't do that. Why can't we do that? Well, we can't do that because our risk to reward on that trade is going to be terrible. Because on a trade like this, the target is basically this high, first of all. And if you're lucky, some more structure points on the way up. All right. So what I would do in a trade like that is I would put my stop loss right here on the last low. Okay, and let's see what that does as far as risk to reward. If we look at the risk to reward analysis, our first TP will be at that high, okay, giving us a 3.66 trade. Okay, so what does that mean? For those of you who are new here, 3.66, that number there basically tells you your reward if you risk 1 unit of your money. So if you risk $1, you're making $3.66. If you risk $10, you're making $36.6. If you risk $1,000, you're making $3,660. Okay, so that would have been our first TP. Now, if you enter that trade and you said, you know what, let's say you even forgot you were in the trade, right? Let's say you decided, you know what, I'm going to the shops, or I'm going to the gym, or I'm just gonna have a nap. All right, but you forgot you're in that trade. Let's see how well you would have done. So if you let that one ride, okay, and obviously there are reasons why you should have let that ride because we didn't get anything saying otherwise, you would have been in for, all right, this is stupid. You would have been in for a nice 32x. Okay, now how often do you make 32x in the space of, let's see how long that would have taken. In the space of a day, about 22 hours. Okay, that is brilliant. So that means if you put $10,000 in, that's not. I know most people aren't trading with $10,000 per trade. Let's if you're an absolute beginner, let's say you're trading with $100 or £100 per trade. Okay, you've just made £3,200 in that trade. That's if you didn't take profit right until all the way up there. Okay, but enough about that. Now let's say you missed that initial trade. Let's say you missed that initial continuation pattern. Let's say you waited. Well, where is the next continuation pattern? Well, this is what it looks like. You went up, you came down, and you had another impulse. And you came down. So why couldn't we have done the same thing here to drive that up? Okay. If we did the same thing there, I'm sure we would have had a confirmation in here. Okay. If we did that, or let's say you didn't even wait for that confirmation. We didn't really wait for that confirmation. What could we have done there? Well, if we look at that, where is the long? All right, so let's say we entered right around here where the range broke again. Okay, I won't recommend it, but let's say we just did that. That would have at least, a 1.9x. Is that a great trade? No. Is it a trade you might want to take? Well, maybe if you're looking at the charts and you're watching your market structure, perhaps, right? So that's kind of what's transpired, in my opinion, over the last few days. So now, where are we, and how can we plan moving forward? Well, I just want to provide a bit of a background as to what's going on here. All right, so Bitcoin has been in this range for a very long time. We know, this has been almost a 230-day range. That is crazy. All right, very long range. Okay, now it looks like because we weren't able to close below this level here, we SFP this level. Can you see that? We SFP this level. We needed to rotate back to the range high, which we have. We look to be going for this all-time high again at 74,000. I think it's about 74,100. It looks like that's where we're headed. Now, Bitcoin has not only, come close towards that all-time high, but in doing so, it's managed to close above this trend line that we've been talking about. And what do we expect? Again, a little quick tip for you guys. What do you expect after a trend line break? Well, let's go back to the drawing board. If we look at the drawing board, if this is your trend line, okay, now price is doing this, coming down from your trend line, all right? After a trend line break as such, bang, that's the break, okay? We expect a retracement back before a continuation, okay? We call this a trend line overshoot. Here is an overshoot of your trend line. We look to get that retracement and shoot up. Similar for your range, isn't it? Similar idea with your range. Just think of your trend line as a diagonal range. If we had a horizontal range, what do we expect? Well, we expect this to happen, and then we expect that to be the overshoot, that to be the retracement for that continuation up. So that point here is synonymous with this point here. Okay, but anyways, there's more of this in the course, which is coming up. So if you do want to obviously reserve that for yourself, definitely let me know. And like I said, I'll pop you on a waiting list. All right. So what we've got now is we have obviously broken out from this trend line at least. So what do we expect? Well, before we get up to the all-time high, the only thing I can see stopping us at this all-time high is this 3-hour zone here. We have a 3-hour supply zone above us, which is, well, surprise, surprise. That's exactly where we are now, and we're getting a slight reaction from that zone. But because we've broken out from this zone here, if price is to come back down just to retest that old range, that old trend line, okay, I would not be surprised. And that may be a position to just enter a tiny little long, at least to this all-time high. Now, you might look at me and say, TJ, why the hell are you longing in premium? If this is your range, this is your equilibrium of this range, this is your discount, this is your premium, why are you longing in premium? Well, I'm longing in premium because I know, well, we'll head for that all-time high, okay? We have just broken this trend line, okay? And we have some liquidity levels that we need to sweep, namely over here, all right? Now, that's not to say at the range high, I'm not going to be A, looking to exit that trade, or B, looking to enter a short trade, all right? I'm still looking for those things, but there is definitely an opportunity here to at least obviously break market structure here, as we can see, this being your market structure, break market structure here, retest, and carry on up. Look at that. That looks beautiful. All right. So let's get back to the drawing board. So in that case, then, what's my plan moving forward? Well, plan number one is simply a retracement, especially on the 4 hour. Why? Because look, on the 4 hour, that break was aggressive, man. That was a very aggressive break, and we haven't fully had a retracement here on the 4 hour. Our 4 hour structure. Let's make this thick. And three looks like this. Okay, we've had that nice shot up. Perhaps we get a decent retracement down to this 4 hour block that you can see here for continuation. Now, I'm not going to be aiming for the stars of that continuation. I'm just going to be aiming for this level here, about 73K. And that will give me a nice 5x, 5% on my account. Why not? All right, I'll take 5% any day of the week. All right. Now, below that, we've also got our fib zone. So I'm just putting that there in there for just to be aware of that. Okay. And we have this nice curved liquidity here that we've built up. Can we see this? This nice curved liquidity that can easily get swept. Now, the chances are, because we've gone up quite aggressively, even if we decide to range here for a bit, we could range here, okay, sweep that high, come down to take that before we head up. That's possible. Or we can say, right, I'm going to come straight down before I head up. But what do you think I'm going to do? Well, I'm going to prepare for both scenarios. So scenario number one is obviously a nice little trade there. Scenario number two, I'm going to drop down to the 30-minute. And as I drop down to the 30-minute, I'm going to say, okay, maybe, just maybe, this is a range. Okay, let's get rid of the bar replay. Because I think, yeah, there we go. See, we've had more price develop, actually. So just maybe this is a range. This is where we are now. I'm going to get rid of this. Just bear with me a second so I can tidy this up for you guys. Okay, just maybe this is a range. Do I need that? Yeah, why not? Okay, just maybe this is a range. And where is that range? Well, that range looks like this. This being your range high. This being your range low. Okay. Your initial range low. So your range looks like this. Obviously, prices come up, then it's come up. Excuse me. Prices come up, then it's come down. It's flirted in a discount of your range for a bit, and then it's deviated your range. Perhaps it wants to retest the discount of your range before it heads up. Or perhaps it says, you know what, I want to come all the way straight down, at least to mitigate these zones that we have here. See these last zones? We've got two order blocks in these zones. Perhaps price wants to simply come. It's already dipped into one, and look what happened when it dipped into it. Can we see that? When it dipped into it, we got a very aggressive reaction there that broke structure. I think that was a break on a 3-minute. All right. Now, is that going to give us that follow through and carry on? Potentially. Or, are we going to come a little bit lower for this 12-minute block before we head up? All right, for that extreme zone. But how am I gonna play this? Well, first things first, I'm already looking out for a long here. I'm considering a long here, and I'm watching to see what price does here. Okay, because if price starts heading towards this zone here, okay, and we get a nice retest, well, I'm going to look to ride that at least all the way up to there at 73,689. Now, if price decides, you know what, I'm going to come back down here, well, I'm going to look to see if we get a flipping market structure here, and I'm going to take that one and ride that all the way up. Why? Because I realize we are still in an uptrend. We're in a 4-hour uptrend. So this could just be a retracement for that next continuation up. Okay. Now, if that's what Bitcoin has in mind, great. I'm going to capitalize on that. Now, Bitcoin might say, you know what? I'm going to just come back up now to this range extreme. Guess what? I'm going to wait to see what it does at that range extreme. If I get a flipping market structure there, bang, wait for the retracement. I'm going to shoot that down. All right. And I'm going to look to enter a short there. So that's another idea. So why don't we pop that over there and say that's another idea over there? And that's a nice idea because it's happening at supply as well. Okay. So where would I take that down to? Just to the other extreme of the range. But look at that, 10x. That's a 10x trade. Okay, if you're able to catch that one. So that is a 10x trade. That's 10% on your account. Not many people make that in a year. All right, so next, let's see what's happening. Obviously, I'm already thinking of a long here. All right, but I'm also going to say, right, I'm considering a long here. Okay. And I'm also considering a long at the next demand zone. I'm going to extend this over here and say, yes, we're considering longs here. Okay. We're considering longs here. All right. And we're going to be looking to take that up to this high here, right? Because that's the technical target. We can also see we're getting this nice build up of liquidity here. Look at this curve. We've got stop losses, people who shorted here, people who shorted here, people who shorted here, giving us this nice little curve that can easily get swept. Okay, so that's what we're looking out for. That is what we are planning for. All right, so for those of you, obviously, who you don't really understand everything I'm talking about, or this is the best place to be, what you need to be doing now is identifying these key terms as we're going through the price action and seeing, okay, how can I research these terms, especially before the course is complete? Because when I finish the course, it's going to be a fully comprehensive course about how you should be looking at the market and how everything is done. All right, but until that comes, you're going to have to just see how much of the skill set you can pick up from these videos. All right. And what I will say to you is there is a lot more in terms of the way you look at these trades, in terms of the way you read the price action. There is a lot more. There is a lot more to it. All right. So these are my trades so far. Okay. Very basic, very standard, very, very standard. What I would like to see on the 4 hour at least is to come back to that zone. I want to see us come back to this zone here. So nice. If price starts to do this, I'm not going to be upset. If it starts to do this, I'm not going to be upset. I'm going to wait. What am I going to do first? Well, I'm going to wait to see what happens at the extreme. Like we said, this is the first point of action. Then the second point of action is this zone. And if we get deeper, I'm going to be a little bit more nervous, but I'll still look to enter it if we get something like this. If we get a nice flip, a retrace, I'm going to take that all the way up. Okay? So that's kind of how I'm looking to play these markets at the moment. On a macro scale, what's in my mind? Well, on a macro scale, we've been in this range for such a long time, all right. But we've had a monumental move. To be honest, we've broken this trend line that's been respected for quite some time. All right, chances are looking like we're coming for this level here. Sorry, excuse me. It does look like we're coming for this high at least. All right. And if we do come for this high, are we just going to sweep it and then head down? And if we are, that will be nice. Now, Bitcoin likes to do that. If you look at Bitcoin's, the price action historically at these tops, we can see it's not the first time we've had something like that. So if we simply, this is the daily, let's take a look. If we go back in time to see Bitcoin and how it's reacted at these lows, I think it's clear on the weekly. All right, so look, first example here. So what does Bitcoin do? It comes, creates this high, creates this range, comes back up, sweeps that previous high. That was the start of the bear market. All right, very simple. What did it do at the bottom here? Well, it came, created these lows, made the first, came back, made the range, came back for the low, swept that prior low, broke structure. That was the start of the bull market. Okay, so could that be what's happening here? All right, where we come up, we sweep that level, all right, and then we head back down. That is a potential. All right, that is a potential. And let's say that doesn't happen. There is a potential trap that Bitcoin can look to set there. And what does that trap look like? Well, that trap looks like this. We'll go into this a bit more detail, maybe later in the week, maybe in the weekend. No, most likely not in the weekend, but maybe towards the end of the week, where we accumulate at the top of the range for a bit. Okay, all right. This is our manipulation phase where we have accumulation, manipulation, just to trap all the guys that think it's the start of the bull cycle, just to drop it all the way down. Anyways, we'll leave it there. I hope you found this useful. We've obviously got the trade, the mega short that could potentially happen, from the range high, but we're watching all these levels, and I'm going to tidy this up, and I'm going to just put an overview for you guys to have a look. Anyways, hope you found this information useful. Feel free to hit the follow button, hit the like button, follow on YouTube, reach out about the course, and yeah, I'll see you next time.